Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said, "Millionaires don't need astrologers, but billionaires do." And so we begin. Today is Wednesday, March 13th, 2024. There was no interesting economic data that came out today, but we are expected to see the PPI and initial jobless claims coming out tomorrow that could potentially move markets. Yesterday's show, I noted that we might be atop in some markets, notably the NASDAQ, triple Qs, and I said I was bullish on silver and China, so we will see how those worked out. Spoiler alert, I was right so far. But we will start today with the S&P 500. This little red candle here shows that we did not break the top of last Friday's wick. And so, again, this is still in this bullish pattern here, but we could see this signaling a potential top. If we break below this line, it will indicate that there is a higher likelihood that we will be going down from there. The next chart that was very notable to me today was HYT, high yield corporate. This is higher risk bonds. So bonds being the smart money, this is like the risky smart money. And we see a very big green candle today. I was very surprised by this, especially considering everything else that's going on in markets and the economy and everything that's going on. But this market is stating risk on right now, and so that could signal to me, that gives strength to me for the S&P 500 to want to follow this actually going up higher. This is a risk on kind of move in high yield corporate. Adding to bullishness, we have the XHB. This is the home builders index, and we have yet another closing all-time high and intraday all-time high. So this market also believes building homes is profitable and this market's doing fine. Now on to silver. I had mentioned yesterday this inside candle after this green candle, saying that that's a very bullish move, and we had a nice bullish move up, a very nice green candle in silver junior miners, which again is my favorite way to track silver, my favorite way to invest in silver, just because it sort of has a leverage aspect to it. When silver goes up and regular miners go up in value, the juniors tend to outperform both of those areas when you consider the amount of gains that you can get in a market. And so, it has, for me, it has greater reward for about the same risk as you would have in regular silver miners or silver itself. And so, a good part of investing is figuring out how much leverage, where you want to be on the leverage spectrum. Do you want, for example, if you wanted to invest in gold, do you want to have a brick of gold yourself and hold on to it? Or do you want to invest in the gold producing industry, which makes money on finding gold and selling it? If you think gold's going to go way up in the near future, then you might be better off getting miners than getting gold itself. But again, if the miners are going to go up, usually that gives even more excitement to the juniors. And so juniors are a great place for me. And beyond that is actual leveraged products. So you can have like futures contracts, but the problems with those is that the risk, once you get beyond juniors, for me, it's like, what do you have? You have options contracts, you have futures contracts. These things add a ton of risk. They add a ton of leverage, but they add also a ton of risk to the trade. So if you're wrong, you'll get hurt a lot more than like a junior miner kind of a thing. The next chart I wanted to go over was actually copper miners. This is regular copper miners. I just like to keep track of this because it is the most important industrial metal, and it often closely ties its value to what's going on in China. And so seeing Chinese equities having strength here, it's not super surprising to see some excitement in the copper market. And when we zoom out, this had been going sideways. We've been going essentially sideways for quite a while, and this is quite a sizable move up. This is pretty exciting here in the copper market. Is this perhaps, for example, a giant bull flag? Let me draw it right here. Do we have this, and then is this our flag? I don't know. It's kind of a long flag. It's a little bit of a stretch from that perspective. But when I play around with the chart a little bit, no, it does look, it could potentially be a bull flag. One thing you look out for is to see if the bottom of the flag is more than 50% of the pole, and it looks to be around that area. It's not too much lower than that. And so, could this be a breakout higher in copper miners? It could be. We will see. Next, the 30-year bond yield, 30-year U.S. Treasury bond yield. I had noted yesterday this perfect looking trend line here, which looks to me like a potential head and shoulders developing. I drew this showing, potential shoulder. We are currently following the shoulder pattern. If this breaks out higher than the head, then it's a different story, but I can easily foresee this in my crystal ball when I look very deeply, this playing out. And so I'm excited about this market. Next, Chinese equities. I had been mentioning how, in the news we had been seeing inflation and how that's good for China, and, it's still going up. We had another pretty sizable move up in KWEB today, 1.16%. This thing is just going up and up and up. Where will it end? Nobody knows. Next notable chart I wanted to mention was actually uranium. This has been one of the more exciting markets out there for a long time. If we zoom out to a super long perspective, looking at a chart going back to 2011, this ETF in uranium was worth $130 back in 2011. And since then had dropped tremendously in value to a low in 2020, or around $7-8, something like that. And the thing is, we still need uranium, and this is likely one of those areas that's been underinvested in for long enough where we actually are looking at a potential deficit. Experts that I listen to about uranium has been talking about this, and so I got in on this, and I'm actually mostly out of uranium. I still have some I have like 1% of my portfolio in juniors still, but I wanted to point out today on a shorter term scale, I had seen, this is a bear flag here, it looks like. So if I doodle this up, we got a pole, and then we have a flag here, and it looks like we broke this trend line here, and so it's easily we could easily see a measured move. So this same distance from the pole to the flag, we could easily see it get down to about that area, which coincides with what looks to me around here, this top here, something like that. I don't know. Sorry, my lines are not very pretty. But anyway, this could be a potential buying opportunity to get back into uranium for myself, or anyone interested in uranium still. I talked about in our last video as well going short on the triple Qs. Gareth Solway pointed out a trend line. He has 25 years of experience. He knows how these lines work better than I could ever imagine. So far, this trade has worked out very well. I have about 5% of my portfolio now in S triple Q. We have it going up 2.5%, and the Q is going down 0.77%. So Yeah, so this is a leveraged product. So when when the Qs go down 1%, I think this goes up about 3%. So I think it has a triple leverage uh, to it, and so I'm still short here. I'm going to be holding on to this for a little bit and see how it plays out. I'll probably either put in a trailing stop loss or just act it out myself at some point if I see it start going against me. Overall, I think extreme caution is not a bad thing to have at this time. I saw in someone else's video very least recently talking about how the liquidity added to the system to save the SVB bank collapse about a year ago from now is now like running out, and so we could see another we could see a lot of volatility coming up, Bitcoin, the kinds of moves, that are happening right now to me look like distribution patterns. It means that things are getting a little crazy, and that can easily lead to a reversal. And so I'm very bearish right now on especially the triple Qs, but also the S&P 500, also Bitcoin. I think these three areas are the highest risk of having potentially extreme volatility in the very, very near future. And that's all I have for today's show. I hope that you enjoyed, and thank you for watching. Again, last note before I do my goodbye: nothing I say is any kind of investment advice. Your decisions are yours alone, and you are responsible for your own decisions. Thanks for watching again. Robschild.